Hi, it's Jim Crimmins from Traders Accounting. Thanks for being here with us today. We're going to take a little bit of time and talk about what kind of business should a serious trader utilize to maximize their tax benefits. Remember, there is never a cookie-cutter approach to tax strategization. Each business has its pros, has its cons. It depends upon what type of tax efficiency that you need. Now, the businesses we're going to talk about today are LLCs, and that would be an LLC with 2 or more members operating as a partnership. We're talking about C corporations, limited partnerships, and sole proprietors. The benefits of trading as a business have been chronicled many times. There's an absolute increase in your cash flow as a trader by being able to deduct your trading expenses. An investor cannot deduct trading expenses. You get asset or wealth protection, and there are psychological reasons that benefit you as a trader for trading as a business. Now, the downside to trading as a business is that you've got to learn a new way of operating. You need to learn to document your expenses. You need to learn the way to document your time. So all of that is new to a lot of people. It's not heavy lifting, but it needs to be done. You've got to learn how to keep the business money separate from your personal money. And one thing that you need to learn is how to have a meeting at least once a year or more. Now, where you have that meeting is your business. I like Maui personally. I love the lanai with the orange juice and the smells. And you must learn how to deduct your expenses as a trader. The first type business you may want to consider is a sole proprietor, commonly called trader status or trader in securities. Now, you've got to qualify to be able to call yourself a sole proprietor as a trader. But there is no election necessary. I know it's a common belief that you've got to make an election. You don't. The qualifications that you need to meet are contained in IRS publication 550, the last page before the index. Now, my problem with these is that the wording is so nebulous. It could mean anything to anybody. Let's look at the first one. You must seek to profit from daily market movements in the price of securities, not from dividends, interest, or capital appreciation. Well, as traders, we may know what that means to us. Where the problem comes in is if you're ever audited, you're going to be audited by an IRS agent who is looking at these same rules. So what does he or she think you must need to seek to profit from daily market movements mean? Do they think you need to be in and out of the market on the same day? The second rule just makes me mad because we do have a tax court case that supports the fact that if you make 330 trades a year as a sole proprietor, you can be considered to be a trader. But all the IRS says is your activity must be substantial. The third one makes me laugh because I'm reminded when I was a kid, my mother loved milk of magnesia. Remember the blue bottle? And this sounds like an advertisement for it. You must carry on the activity with continuity and regularity. Well, that's pretty standard IRS speak, that you don't go into business for a couple months and vacate it and be able to deduct your expenses. A business operates throughout the year. So, another thing, the benefits of a sole proprietor, it doesn't cost anything to set it up. The concerns, I have concerns about these qualification statements and the amount of audits that the IRS has for sole proprietors. Now, entity is a different animal. An entity is formalized, it's blessed by the state that you set it up in. It is a business when it's set up. That said, I truly believe you still have to be an active trader to convince the IRS that you're in the business of trading. And that would come back to, I think you need to spend at least 500 hours a year on your trading activity. How do you prove that to the IRS? Well, get a day timer. Very simple, get a day timer, and every time you spend some time on your trading activity, whether it's listening to CNBC, taking a webinar, taking a seminar, or actually trading, note the amount of time you spent, because if you're going to be audited, you're going to be audited 3 years from the date that you turn in your tax return. And you're not going to remember how much time you spent. So pull out the day timer, and that will really convince the IRS that you are treating it as a business. When you set up an entity, you don't have to have the same number of trades. I think it devotes to the time that you spend. And you're able to deduct your expenses. You've got wealth protection, asset protection in an entity that you don't have as a sole proprietor. And that's important in our litigious society today. Generally speaking, there's fewer audits, and there is a standard psychological benefit of trading as a business in that you seem to develop the discipline as a business easier to become a better trader. Now, the downside to using an entity, well, it costs something to set up the entity, but not a lot. At Traders Accounting, we set up entities for active traders in every state in the union. It's only $395 plus a state filing fee. Then you have the learning curve in learning how to treat your business as a business. We help you with that. When you set up an entity through Traders Accounting, we have a free consultation after you set up your entity to get you started so you know how to go and how to get there. And then you have to have annual meetings. An LLC specifically, a limited liability company, as a partnership, it's a flow-through entity. The profits flow through with the same characterization as they are earned. In the case of most traders, that would be they flow through to the owners as capital gain. And you have to trade as a partnership to get the benefits of an LLC. You get the asset protection, no payroll tax due on the money that you take out, and you can take out your living expenses on a monthly basis if that's what you want to do. You have the ability to set up a self-directed 401k if you have a good trading year. This adds to your expenses by helping you with your retirement, and you're able to make the mark-to-market election through the LLC if it's appropriate. The downside of using an LLC, again, it's a cost, $395 plus a state filing fee. C Corporation, now I can see a lot of you rolling your eyes because there's a lot of urban myths out there about C Corporations. But remember that a C Corporation has use. It's tax efficient for some traders. Two of them that are most important, if you have medical expenses in you and your family that on average exceed $3,500 to $4,000 a year, and you're not able to take them off of your personal tax, a corporation has the ability to have a medical reimbursement plan where you go ahead and incur the expense, but then you turn an expense report in to the corporation, and it can make you a check for the total amount, deducting that as an expense to the corporation. This is a written plan. If you already have a corporation, we've got the plans here, so give us a call. Also, for those of you that are in a high income tax bracket, you recognize that every trade that you make is costing you 35% in just federal income tax alone. Well, if you trade in a corporation, the benefit of a corporation is that up to $50,000 net income, that's after all of your expenses, you only pay 15% tax. You can deduct your expenses, you got tons of asset protection, plus the fact you know a corporation is a business when it's set up. Again, I think you need to be an active trader. The downside of using a C Corporation, $395 cost, you have to have an annual meeting, and how do you get your money out? Now, those are all strategies that you need to discuss with your accountant or with Traders Accounting. I really like a C Corporation for newbie traders that are still holding down a job. They don't need to take money out to live on. They're trying to get the 2 or 3 years experience to make them a really good trader. Why not trade in a C corporation? Take advantage of the benefits and not add to your tax burden. What does the IRS say constitutes a business? You've got to have a profit motive. You've got to carry on the activity in a business-like manner. The amount of time and effort that you put into the business, generally 500 hours a year, is thought of a reasonable amount of time for a business. If you're not profitable, are you changing the way you're doing business? Obviously. If you're not profitable after a year and a half of trading, you may want to go to another trading school and get a different slant on trading. Remember, at Traders Accounting, we know that there is no cookie-cutter approach to tax strategization. We offer a free consultation, free 30 minutes with one of our coaches to see which one would be the best fit for you. We want you to have the best fit. If you set up the wrong one, instead of saving you money, it could cost you money. There is no cookie-cutter approach. Call us for your free consultation. We would love to talk to you. I hope you found the information that I shared with you in this video to be helpful and that you now have a better understanding of the subject. The IRS has never made taxation simple, and for traders, I think they must have even tried harder to make it just a little more confusing than with other businesses you might be in. My mission at Traders Accounting has always been to make trader tax less of a burden for traders by providing services that allow you to focus on your trading and leave all the rest to our accounting professionals. Good trading to you, and don't forget to take advantage of my free material and offer that you can find at tradersaccounting.com/video.